Hey everyone, Malcolm here with Arborisk for this week's weekly tip, which is how to take control of your insurance costs. And we all know that finding a good insurance company for your business, make sure they understand your operations with competitive coverages at a competitive price, is very hard to find. And if you want to be a good risk for the insurance companies, it's important to know what exactly the insurance companies look for. And this may sound obvious, but the insurance companies really just want to make a profit. So if you want lower insurance rates, just have less claims. It's that simple, right? Unfortunately not. So we have 4 different pieces to the risk management process, and insurance is often the last step where we talk about transferring the exposure to the insurance companies. But the 4 pieces are avoiding, reducing, retaining, and then that last step, transferring. So let's first talk about avoiding. What kind of exposures or operations in your business would you really want to avoid? Probably the higher risk exposures with not as much payoff. It could be things like installing Christmas lights, removing ice off of rooftops, or maybe it's even snow removal in general if that's not a key piece to your business's income. So think about your operations and which operations you want to avoid. The second piece is to reduce the exposure of your operations. So you might have key pieces to your business like tree care, trimming, pruning, removals, things that you have to do every day that still have a good amount of risk with them. What kind of things would you want to put in place? Some written policies, some daily safety briefings, weekly safety meetings, a safety committee potentially, so that you're really doing your best job to reduce your overall exposure for those core operations that you have to do day to day. The other piece is to retain. What kind of things would you want to retain? A good example of that would be minor equipment, you know, things like chainsaws, ropes, things that may get lost due to theft, get lost due to storm damage from something coming through and wrecking your property. Those things, really, why would you want to pay the insurance company a larger premium on this equipment if you can just pay that same amount out of pocket if there actually was a claim? And if you really take a look back and think about the amount of claims you've had on small property like chainsaws, why would you really insure them if you're not having any claims or if you're not really worried about having any claims? The last piece is to transfer the risk. And these are things, these are the core pieces to your business that have a high risk that you really just can't avoid. Probably a lower frequency, a lower potential for claims, lower possibility of claims with a higher severity. And this could be things like your employees falling out of a tree, a property claim like a tornado coming through and ruining your building, or auto claims, typically coverages where you have higher limits. So what I want you guys to do is really take a look back at your overall operations and kind of look at it with a proactive mindset and think about what things have high severity and lower frequency, and then what things have low frequency and low severity that you could possibly consider retaining on your own dollar. Hopefully this helps you guys lower your overall insurance costs and in the long run help your overall profit margin. Thanks.